Thanks for that, Alex. A couple of stocks that are actually buzzing in trade, and as you can see it on your screen, a lot of them that are buzzing in trade. You have Strides, Muthoot Finance, NBCC, as well as Bandhan Bank. But I will highlight a few for you. First up is Brigade Enterprises. Vanguard FTSE All World ETF has bought about 0.8% stake in the company, so that particular counter is in focus. Hind Copper has successfully raised funds via QIP. Also, you have Motherson Sumi. Moody's has affirmed the rating for the company, has also revised the outlook to stable from negative. You have also TCS that is buzzing on back of your Q4 earnings. Not buzzing in the sense, it's actually declining in trade. Adani Ports, another counter that's declining, and that's because S&P Dow Jones Indices has removed the company from its sustainability index. And lastly, Dr. Reddy's, that particular counter is actually currently off a day's high. They've got emergency use authorization of Sputnik V. So that's why Dr. Reddy's is also in focus today. And talking about Dr. Reddy's, we all know that the DCGI has given the approval for emergency use authorization for Sputnik V. But what does this mean and what are the brokerages saying? Abha is here with that. Abha?
Seems like we will be joined by Abha just in a short while. We'll fix that technical issue in just a short while. Let me introduce our guests though today. We're joined by Kunal Bothra as well as Saurabh Jain. And I do want to focus, gentlemen, today. First of all, good morning to you. I do want to focus on the large cap the large cap pharmaceutical names. Yesterday was our focus on large cap IT. Today we want to focus on large cap pharma. Of course, we're in a period when pharmaceutical companies have actually been in focus all of last year, and particularly yesterday you had a situation where Dr. Reddy's was perhaps one of the biggest gainers, gaining about 7%. It's down about 2.5–3% in trade as we speak right now. But let's first focus on the technical aspects of it, and then let's move on to the fundamentals. So Kunal, we're looking at the pharma pack and it's a little weak in trade today. Are there any technical factors that have led to this kind of a correction?
So good morning, Alex. First of all, I think it's an interesting perspective to look at, because pharma stocks, they generally move up higher, as how the market gets into more of a defensive mode. So once risk is off the table, you generally expect pharma stocks and the FMCG and IT names to pick up pretty well. Now, what I've done is I've done an analysis of the last 1 year approximately, from the March to 2020 lows, and how these pharma stocks have performed and behaved. And apparently the topmost blue line which you can see is actually the line of returns for Aurobindo Pharma, which means out of the large cap names, out of the pharma stocks, this has been one of the top performers in the pharma category so far. Apparently Dr. Reddy's and Sun Pharma have been underperformers. So the lowest line which you can see is actually the trend line for Dr. Reddy, which means Dr. Reddy has underperformed as well as Aurobindo Pharma has outperformed, which means the markets have somehow favored the high beta names in the pharma pack as compared to the traditional low beta stocks. So, as I was discussing in the morning show as well, that for Dr. Reddy to perform pretty well, you need support from other large cap pharma names. It's not that by solidarity that Dr. Reddy would move up higher, and then you could probably see the stock moving up higher, even if the index actually goes through a correction. So what you're seeing right now is probably a sector reaction, a sector churn, which is happening. Probably if this trend continues for pharma stocks, say for the next couple of days, where you might see these stocks going to a downward drift, then we can actually make a sort of a conclusion that probably the markets are getting back into a risk-on mode, where they're trying to sell back into the defensives and then getting getting the money or the funds parked back into the aggressive sectors like the traditional financial services and the banking stocks.
Very interesting points that you're raising there, Kunal. But I do want to speak to Saurabh about the fundamentals of the stocks that you've mentioned. Auto Pharma, clearly the outperformer if you look at the year that has gone by. But Saurabh, on the fundamentals, what stock according to you stands out? And also comment on the latest development for Dr. Reddy's Laboratories. How big would this Sputnik V approval be for them from the perspective of earnings?
I think it largely yesterday move was more of a sentiment-driven kind of a thing, because if you see the last quarterly result earning of the Dr. Reddy, they have done second time amortization of the assets they have purchased, and that is the reason because of which they have reported lower profitability. Apart from that, such approvals tend to be good enough, but they are not margin accretive. But in the sense that what I feel is that in the March month, the Indian pharmaceutical industry have reported good double-digit growth, primarily led by the volume growth, price growth, and new launches. I expect the companies companies in the therapeutic areas like respiratory, Cipla, or maybe Sun Pharma, Elchem Laboratories will do pretty well, because they are into the therapeutic segments as well as in the vitamin segments. So some kind of a sectoral churning which is happening right now, because there is a concern in the market that because of the lockdown, things will turn again back to the favor for the pharmaceutical industry, which anyway has a huge footprints in the global industry. So I expect some companies to do well, but not all companies would do well.
All right, that is Saurabh's view coming in on Dr. Reddy's, also what this particular approval also means for the company. But let's get on board Abha, who's here to take us through what the brokerages are actually making of this approval coming in for Sputnik V and what it actually means for Dr. Reddy's. Abha?
All right, a whole host of brokerages coming out with their views on Dr. Reddy's after the approval of the Sputnik V vaccine here in India. The EUA for the Sputnik V is seen as a near-term upside on the counter. JP Morgan, in fact, saying that the approval will help to increase, of course, vaccine capacity. Dr. Reddy's will supply about 125 million units of treatment as well. And they've also said that this will increase DRL's FY22 EBITDA by more than 10%. So they're sounding fairly confident. They said that the only thing is it's a limited time versus supply opportunity at this point. So it is a little bit more of a near-term upside. That's according to JP Morgan. They've also had a view coming in from Morgan Stanley on Dr. Reddy's. They've maintained their equal weight target at 4893 per share. They've actually said it's a little difficult to calculate the upside because we don't yet know all the intricacies, for example, of pricing, components, etc. But they've said that, again, limited flexibility on supplies, margins on Sputnik V from what they do know of the vaccine, and therefore they're seeing it as a limited upside as well. We've also got another view coming in saying that exclusive marketing and distribution rights for the first 250 million doses, assuming $2 a dose, the revenue potential then is more than $300 million. They've also raised the EPS estimate by 5% and 2% for FY22 and FY23. So we do have somewhat of equal weight, a slightly positive view coming in from most of the brokerages on Dr. Reddy's, but clearly it's seen more as a near-term benefit for the counter, and some more details, of course, on the vaccine would go a long way.
All right, so, well, that's what you need to know about the Dr. Reddy's development with regard to Sputnik V. I want to go back to Saurabh on the fundamentals. So, Saurabh, if you look at not just the last 1 year or so, because I think the pandemic has, to a certain extent, you can say, been an inflection point. If you look at the last 5 years or so, there has been the overhang of the US FDA and various observations that have come in and that have derailed, to a certain extent, a couple of pharma names over that period. A lot of them have made smart recoveries from that point. But does that overhang still remain, and what counters, according to you, are the strongest on the fundamental front that you would suggest our viewers get in and add to their portfolio?
I think that overhang, I think Indian pharmaceutical industry have come over that overhang. Nowadays, we are seeing Indian pharmaceutical companies are getting faster approval from the US FDA, especially after the distrust from China. I mean, China and India were the only two countries which are supplying hugely to the US markets, and now US markets are more, US authorities are more have more inclination towards the Indian companies. Companies which have good amount of presence, for example, the Cipla and in the, for example, Alembic Pharmaceutical, which is into the APIs, are doing actually pretty well, and there seems to be no overhang in terms of US FDA. The continuous observation we have seen in the past. In the last 4 or 5 years, I think this has proven that was a kind of a detrimental for the Indian pharmaceutical industry, which were witnessing lower contraction in their margins back at home and abroad. Now, I think they are witnessing both expansion and the clearance from the US FDA, and that is why we are seeing that the multiple expansion in the last 1 year. I think we have overcome that issue, and they are poised for a well growth in the near future.
I do want to ask you a follow-up on that. You mentioned margins, and that in fact is one of the primary concerns that has been raised with regard to the Indian pharma companies that have a large exposure to the US markets, is that there could be pressure going forward on margins because price control could come in at some point or the other, or there could be pressure to lower prices. Is that something of a worry, and what would you say with regard to that?
It depends upon the product to product. I mean, the US authorities are anyway, quite stringent about some of the products on which they want, the importing, exporting companies should keep minimum margins. But wherever the Indian pharmaceutical companies have advantage, for example, in terms of getting US FDA approvals, or the drugs which they are supplying are in the limited space. They are enjoying quite a good amount of margins. So I mean, the margin compression could come anyway, maybe in a quarter or two. But we have to look in the last 4 or 5 years what has happened and what is the guidance given by the Indian pharmaceutical companies. So I don't think so that would be a problem, because now the game is much bigger. The market is getting much bigger because of the rising presence of the Indian pharmaceutical companies in the global arena.
All right, that is the view coming in on the pharmaceutical sector from Saurabh. But now it's time to get the high risk and low risk ideas from both the experts. Kunal, I'll come first to you. And what's your high risk and low risk idea for our viewers today?
So, Cheryl, I'm expecting, as I said, that stock specific, there could be, rallies which can be seen on individual stocks, but the index could remain in a bit of a range as such. So, the first one which I'm suggesting is actually a buy on Dabur. The stock, I think, is very close towards, or rather has made a fresh, swing high for itself. It's trading with a, steady degree of momentum as well in the last 2 weeks, rising up from those levels of 500, 525 to levels of 560 where it's currently trading. So would suggest a buy on Dabur for a target of 575, 580. Stop loss could be kept at 554 mark. The second is a buy on LT Foods, or the NSE code is Dawat. For the stock, it's a strong recovery which you've seen. The monthly pattern for Dawat or LT Foods is more of a bullish flag pattern breakout, and the stock even after going through those periodic bits of retracement has managed to pick up pace in the near term. So today also the stock is into stronger degree of momentum. So would suggest a buy on LT Foods as well. Targets could be kept at approximately 674 mark, and stop loss could be kept at 62.
All right, those are Kunal's ideas, Dabur as well as LT Foods. Saurabh, what's your high risk and low risk ideas for the viewers?
I'll be discussing both low-risk ideas. My first idea would be ITC. The target for which we have kept is approximately 265. If you look at the first 9 months of the current financial year, the testing time, the company launched more than 100 new products. The cigarette volume is back on track after the sequential. We have seen good amount of strong sequential recovery. Followed by the easing of this restriction. The company continues to remain aggressive in the FMCG space and gaining market share. Volume is likely to be higher quarter on quarter. So we are keeping a target of about 265. The second idea would be Crompton Greaves. The target is approximately 435. Sales across the rural channel have witnessed strong growth momentum. I mean, there is a kind of 88% growth the company has witnessed. The company is launching newer products, especially in the fan segments. They are penetrating into the newer markets where population is approximately 50,000 to 1 lakh because of the the government efforts to provide electricity to the last mile. These kind of companies are actually enjoying good traction because of this electricity penetration. It has reported robust growth in the third quarter, and I expect that the volume growth and led by the price revision would actually translate to higher top line and bottom line. So we are expecting a target of about 435.
All right, that's Saurabh's view as well. All right, hang in there, gentlemen. Time for a break on this edition of Buy Now, Sell Now. But for all of our viewers, we are live on YouTube and the other social media platforms as well. So do log in to get your queries answered, which we will come back with after this break.
Welcome and welcome back to all of you who are tuning in live on our social media platforms. Thanks so much for joining in. We're going to start taking your queries as we speak, and quite a few have already posted their queries. I'm in conversation, or rather we are in conversation with Kunal and Saurabh, and they're going to take all of your queries over the course of the next 20 minutes or so. I'm going to start with the first YouTube query that's coming in, this one from Suhas Shah. It's this very simple question. What about Cummins India? Let's pull up that chart and see where it's currently trading. Suhas, I would encourage you in the future to indicate what your time horizon is, and that will help us go to the right person and get you the answer that you're seeking. I'm going to go across to you, Kunal, because he's not really mentioned a time frame, and he's speaking about a stock that has done very well for itself. It's a doubler over the last year or so, but it did see quite a bit of correction. Is this a good opportunity to pick it up?
So absolutely, I think it's a good stock. Alex, it's been a tripler, I think, from 300 levels to level of 900, which it tested a week or two back. I think it's been an exemplary performer. And also, I think the stock has a history of going through rallies and more broader consolidations, more of time corrections. So I think in that sense, trying to get into the stock at corrections or at lower levels seems to be a good entry, a good strategy for the stock. The only catch is that probably the major support for Cummins India could be somewhere closer to 750, 770 mark. The stock has made a low today of, I think, approximately 800 levels. So I think it's coming very, very close towards those kind of strong support zone. But I think if you have a buy and dip strategy, and if you're in from a longer term haul, say by at least 1 year to 2 year plus kind of a time horizon, then I think starting at current levels could be a good approach. So you can start at 800, 830 levels where the stock is trading, and look to add on further corrections, specifically at that 750 mark.
Saurabh, coming to you next on this question that we have from Mahesh Vaidyanathan. It's an interesting question. He's looking at Coromandel International for a period of 5 years. The stock has done pretty well for itself over the last year or so, about 46% gains. And, it's looking a little weak in trade today, down about 2.6%. But we're, of course, talking about the long-term prospects of this counter. So is this a good time to consider buying Coromandel International?
I think this stock is consistent. The company is consistently, compounder. If you see, it is a very good company from the Murugappa group. Now, over the years, the company has improved its performance both in terms of revenue, sales in the fertilizer segment, in the expansion in the margins, and they have done the capex activity in the past also. I think for the time period, for such a long time period, for 4-5 years, I think one can expect a steady 15-20% compounding kind of return from the investment in this company.
All right, we have a next query coming in from Manohar Himnani. He's saying that he's bought Gujarat Ambuja Exports at 133 rupees for a long term of 5 years. He's asking, please suggest what should he do. Saurabh, I'll come to you with this particular on this particular counter. Gujarat Ambuja Exports over the last 1 year has seen a solid run up. But how does fundamentally how does the stock look over the longer term?
I think the company has posted good set of numbers and has seen a good amount of run-up. But since it is a mid-cap, I would suggest if you are having large-cap stocks in the portfolio, then it is okay to invest in the Gujarat Ambuja Export. But if you are betting only on single company, then I think consistent compounders should be from the Indian infrastructure play, or maybe from the IT pack, or maybe from the financial pack. I think you should have some kind of large cap in the portfolio if your horizon is that long. So I would recommend to stick with the large name from the IT or from the banking space. That would be my advice.
All right. Let's go to the next one then. We've got a question coming in from Sheikh Aslamuddin, who's asking about JSW Steel for today's intraday. Kunal, coming to you on this one. How does the stock look? Yesterday saw quite a bit of a tumble. What's the view on it today?
So I think from an intraday perspective, maybe the range for the stock seems to have formed. I think 605 and 625, 630 has been the intraday range for last 3 days for JSW Steel, and I think it's been meandering in this 30-point band since last 3 days. So it's consolidating over here. Difficult for the stock to pick up a trend for itself, because the market conditions are a bit grim over here. So I think in that sense, possibly the stock may remain in this range 605 to 630 approximately. So if the stock comes back to the, say for example 605 levels, I think that could probably offer some good intraday buying opportunity or better risk reward trade for JSW Steel specifically.
All right, our next query is coming in from Tatpan Janwar. He's saying that he's purchased Tata Power at 113 rupees per share. He wants to know whether he should hold on to this particular counter or sell, and he's a long-term investor. So Saurabh, what's your view coming in on Tata Power? This also particular counter saw a good set of rally, but he is a long-term investor. So what should he do with this particular counter?
I think investors in the Tata Power company for the long term should not be, investors should not afraid after investing in this company. The stock has seen huge re-rating after the company's plan to restructure its balance sheet and reduce dependence on the debt, and the way they are looking forward for the next 4 or 5 years. I think the only thing is that he has bought at a higher price, but since he is invested for the long term, I think there should not be any worries. Hold on to your investment.
Okay, we've got an interesting question. This one from Adil. He's looking to pick up, Kunal, MGL and IGL, and it's quite an interesting couple of stocks that he's picked up, but he's not sure at what point he should consider entering. So are the charts indicating when this opportunity could present itself?
So Alex, I think out of these two stocks, if assuming the question is that to pick up one of them, then I would give more preference, of course, to IGL, because of the inherent quality of the trend. So, yes, both the stocks have trended quite well from their 5 month, 6 month lows. But then when you look at the quality of trend, IGL has of course fared far more better and has been one of the more resilient stocks in that category. So if you have to pick and choose, I would suggest that you can stick with IGL out of the two. But assumingly if you're looking at investing both or in both of the stocks, then I specifically believe that in MGL has multiple supports, almost a 6 month, 5 month support at those 1020, 1050 mark. And it's just about in touching distance of coming into that kind of a support territory. So maybe another couple of percentage points drop on MGL. And I think it could probably, offer some attractive, confident buying opportunity. For IGL, on the other hand, I think when I look at the charts, it's not done much, in the last 2 months. I think it's remained more sideways, going into a time correction. In terms of levels, I think 480 could be a better level for entering into IGL.
All right, the next query we've got is from Sachin Kumar. He's saying he's been holding on to Ujjivan Financial Services in the last 2 years. What should he do with this counter? Sachin, you've not mentioned the quantum, the amount of shares that you bought it and at what price. But Kunal, how are the charts looking for Ujjivan Financial Services? Our viewer has been holding it for the last 2 years. What should he do? How are the charts looking like for this particular counter?
So what happens is there is one very important point which I think everyone who's wanting to invest into these kind of stocks or sectors is that you have to understand the degree of volatility into these names, how susceptible these stocks are to correction. Now, for example, Ujjivan, when you look at it from the March 2020 recovery, yes, the stock did pretty well. From a low of 125, it went up to almost as much as 300 odd levels. But from 300, look at the vulnerability of the stock. In the last, I think if I'm not wrong, this is the 5th straight month where the stock is going through a correction. Now compare this with many of these other large cap names in the financial services name, like maybe a Bajaj Finance or maybe a Chola Finance, etc. I think these stocks have done reasonably and remarkably well. So my suggestion is that if you are in from a longer term perspective, then I believe making a switch from Ujjivan Finance to these large cap names like maybe a Chola Finance or Bajaj Finance could actually play out to be much more prudent decision rather than staying invested in a very high volatile mid cap stock in that sector.
Fair enough. Interesting call there on Ujjivan. Let's take the next question on a large cap banking name then. Raghunathan's got a question on ICICI Bank. Raghu, you've got a question on two banks, but I will take only one counter per individual. You've bought ICICI Bank at an average price of 534, and you're looking for a long-term view. So I will go across to Saurabh on the fundamentals. Saurabh, how are we looking at? Of course, we're going to wait for the Q4 earnings for these banks to pan out, but what's the view specifically on ICICI Bank?
I think view remains quite optimistic on the ICICI Bank. If you look at the numbers, they have consistently improved. The margin, net interest margins have improved. NPA have declined. The capital adequacy ratio has been already strengthened by the bank. So I expect no worries. The bank is clearly focusing on the retail side. Every bank is focusing on the retail sides, and I expect the corporate growth would also come in the due course with the ongoing recovery in the Indian economy, especially the government thrust on the infrastructure side. So I'm quite confident that the ICICI Bank will give good returns in the next 2-3 years. I think my advice would be to hold.
All right, let's get on board our next viewer query, and this is from Mainik Chakraborty. He wants to know whether it's the right time to make a fresh entry into HCL Tech for the longer term investment. Kunal, I'll come first to you. HCL Tech, we spoke about the large cap IT names yesterday. HCL Tech today is actually down in trade, considering what is happening with TCS and entire IT pack as well. So does it make sense now for the viewer to enter HCL Tech for a longer term?
So, what actually happened last quarter also, Cheryl, that many of these IT stocks, they actually became, buy on, anticipation of the results and then sell, post the results. So, there was this trade phenomena which happened for the IT stocks in the last 2 quarters. I remember, I think specifically even from the September quarter as well, we had seen these, stocks going through a downward drift for at least a 1.5 odd month. So in terms of timing or timing it aptly, these stocks went through at least a 1 month correction of 10-15%. Specifically HCL Tech from 1050 levels. In the previous quarter, it corrected and went down to as low as 900 levels as well. So if that's the trade which is actually playing out for these IT stocks, where on the anticipation of the news or the results, these stocks move up and post results, you see a correction. And if a similar correction pans out for HCL Tech, then you can probably expect the stock to come back to 900 levels. So I think a much better entry point is closer to that 900 mark, which is also the previous support for the stock price.
All right, we've got the Bajaj twins that are doing reasonably well for themselves, or at least they were just a short while back. They took quite the battering in yesterday's session, but the question is from Rahul Pahade, and he's looking for a long-term view on Bajaj Finance. Saurabh, they have been a little cautious over the last year or so, and they've stated very clearly that they are happy with that caution. Having said that, what is the view on the fundamentals? Would you suggest that you can still enter at this price for the long term?
I think the market has always paid premium because of the kind of the growth that the company has given over a period of in the last 4 or 5 years. But considering the fact that they are going slow and there is a concern that there may be rise in the delinquency rate for the likes of Bajaj Finance, I would recommend. I would say that at the current market price, it is better to stay away from investing, making fresh investment in the Bajaj Finance. I would rather recommend to invest in the full-fledged bank, for example, the stock which we have discussed just now, ICICI Bank or maybe Axis Bank for that matter.
All right. There's another query that's come in from Jaydeep Chakraborty. He's saying that he's purchased India Glycol at 535 rupees per share. He's a long-term investor and he wants to know whether it makes sense to hold on to this particular counter. Saurabh, India Glycol over the last 1 month has not been great for this particular counter, but how is the long-term prospect looking like of the stock? Does it make sense fundamentally to continue to hold on to India Glycol?
I think it is a mid-cap stock. Largely, I think the liquor story was the key driver for the price action that we have seen in the Indian glycol. I think that story is actually getting subside. There would be a problem in the margins and the volumes for the Indian glycol also. So I would say that it is better to take money off the table and invest in some large cap companies.
Let's take a short-term view. We've got Praveena on YouTube asking about Cadila Health for a swing trade. Kunal, coming to you on this one.
Oh, interesting chart. I think till yesterday or day before, if I'm not wrong, Cadila did pretty well for itself. Went up to. So what I'm sensing is that the viewer could probably have taken a trade above that 500 mark, where the stock had given a swing breakout on the back of some strong volumes, but then it's come down again below the swing level. So these are swing false breakouts which do happen on a natural course of price action. But then if you're in from a slightly medium term view, then I think such kind of swing breakouts and then a false corrections which happens post that, they actually become good buying opportunities. So I think if if a time horizon of at least 2 months to 3 months is taken over here, then I think closer to 470, 465, I think would actually be a good averaging opportunity for Cadila, if assuming you've bought it at higher levels, and then wait for those swing targets to or the swing pattern to actually fulfill. I believe possibility of a 525 breakout on Cadila is a much higher probability for the trade.
Query coming in from Shakti saying he wants to know what are your views on Vodafone Idea. Saurabh, do you want to take this one on Vodafone Idea? How does this particular counter look like?
I think they have lost customer in the last few months, and it is the last month data which revealed that they have added some customers. Besides, the balance sheet is in full red. They have negative net worth. The promoters are not willing to put fresh money. I think there are a hell lot of problems with the Vodafone Idea. So I would recommend it is better if you want to invest in the telecom, they're better to stick with the Bharti Airtel.
All right. I would advise viewers to not ask questions on extremely volatile stocks, also penny stocks. I will not ask my guests to comment on them. I'm going to take a question to Saurabh on Vedanta though. Sandeep Kumar Pandey is looking at, or he's wondering whether to buy this counter or not. In the context, Saurabh, of everything that we've seen in the recent past with regard to this counter, would you suggest a fresh buy?
See, I would suggest because of the the promoter willingness to buy the company, coming out with the offers. They have got approximately failed 3 times, and everything has happened with the Vedanta. I mean, people have lost money because of the offer, and there has been rallies afterwards. So I would this is a kind of metals are actually very cyclical in nature, and besides, because of the promoter continuous intervention with respect to the buying of the company, I think it makes stocks all the more volatile. So if you want to invest in the company, I would suggest metal space. I would suggest better to go with the Steel Authority of India.
All right, that is sort of Zhu coming in on the metal space. Next is Vijay Yechuri. He's saying that he's bought 500 shares of IDFC First Bank at 58 rupees per share. He wants to know for how long can he hold on to this particular counter. Kunal, I'll come to you on IDFC First Bank. Last 1 year, spectacular run coming in for IDFC First Bank. Last 1 month, we've seen the stock actually tumble a bit. How are the charts looking like? Does it make sense for how long actually does it make sense to hold on to this counter?
Well, I would reply that the longer you hold, I think the longer is the stronger the gains you can get into this stock. It's an emerging name as such from the private sector banking stocks. We've seen a remarkable recovery in the last 1 year, and something which has which has taken the market by a bit of a positive surprise as well. The rally from 30 odd levels, 35 odd levels to a jump till almost 60 levels for the stock in just a matter of couple of months, and then a cool off, which is a natural course of cool off which happens into stocks, which gets ready and prepared for a much longer term upside. I think from a 12-month to 18-month perspective, I would place a target closer to 68 to 75 kind of a target range for IDFC First Bank. But as I said, that possibility, if the structure evolves to be a much more stronger structure for the stock, then the longer you hold, I think the stronger could be the gains for the stock.
Very quickly, and this is now coming from a viewer, I don't know the name of, Kunal, coming back to you. What's the view on the Bank Nifty in the current series?
Well, I would believe that the banking index could probably drift lower. There has been a huge amount of call writing which has happened, and call writers are the ones which actually hold a lot of prominence, or option writers hold a lot of prominence. So I think for the current series, I would expect banking index to remain in a range. Possibility that 32,000 could act as a resistance, and a stiff resistance at that could be the way to look at on Bank Nifty. And on the downside, I think a possibility of even a 29,500, 29,800 could be the lower end range for Bank Nifty.
All right, Nino, Prajwal, Deva, all of you who've tuned in and who've asked your questions, and unfortunately we couldn't take them. We'll try and take them when we come back on Thursday. It's been a pleasure speaking to all of you. I'd like to thank both the experts who joined in today, Kunal as well as Saurabh, for taking the time and for being such good sports and for answering the questions that you did answer. We're going into a short break on this program. We'll come back with a lot more.